Morgan Stanley analyst just covered Nvidia and he said the unthinkable. So I want to go over this clip with you guys and tell you why this is so important.
Joining us right now for more on the company and the sector is Joseph Moore, Morgan Stanley's senior semiconductor analyst. And let me just ask you, Joseph, what happened this week? What's pushing the momentum one direction or the other on this stock?
Yeah, I think for me, the bigger surprise was what happened in the prior couple of weeks. You know, the quarter was really good. They beat by $2 billion, which has never happened until Nvidia started doing it a year and a half ago. And I understand they're wrestling with these expectations issues, and there's some gross margin questions that came about, but I was really surprised at the sell-off. This is our top pick. Demand is very, very strong. And, at this point, focusing on the sort of product cycles and things like that, it's very important. We want to see the company execute to that. But really, the key issue is just the strength of the business. And we heard that from Jensen this week at a conference. We've heard that from a number now of significant executives on the customer side, how much they're committed to these workloads. So I think this is still, a very compelling story. And again, to me, I don't know exactly why it was up this week. I don't know why it was down so much last week. But the stock is very reasonably valued with very good growth prospects here going forward.
Will Blackwell have lower gross margins versus Hopper?
I think maybe a tiny bit. I think that when the product was launched in March, they had sort of discussed some price points, on CNBC at one point, and that's a little bit unusual. I think they're very focused on, can we continue to provide value? Can we continue to grow the market? And I think they're probably more focused on that than the specifics of gross margin. There's going to be a little bit of pressure here in the next couple of quarters, which is really just the early stage of that. We're ramping it up. There's going to be low yields initially. I think they've sort of said over the full life cycle, the gross margins will be similar, but they're also expanding the scope of products. There's going to be a microprocessor with Grace. There's going to be an NVLink switch that they sell into these racks. There's a lot of things that they're selling that could have a little bit lower gross margin. So we have gross margins down by about a point next year. I don't think it's that big a deal in the context of how high the operating margins are and how much operating leverage there is. But I think it is, the answer to the question is yes, it is just a tad lower. But that doesn't change the fact that the gross margins are still very good.
So the stock's just under 120. You've got a $150 price target on it. What's the time frame for that? Because that's another 25% increase, even if you think that they could have a little bit of a rougher time over the next few quarters.
Yeah, look, it's a 12-month price target. And
guys, 12-month price target for 150, and there was a lot of talk actually about margin. So where Nvidia's business is and the story of their business. I want to point out that I think Nvidia 150 is very reasonable. That's actually what I like about this video right here from Joseph Moore, is he's being very realistic. And I'm a big fan of selling options and creating consistent passive income. And given Nvidia is slightly under 120, and I think it's going to be around 120 for some time, this makes it the perfect environment for selling both puts and covered calls on Nvidia, which is my bread and butter strategy. This is a strategy I've been running for 7 years now. So here's the trades that I would make on Nvidia before I finish off with the clip, is that I would simply go to trade Nvidia options. By the way, let me just point out what I already have on Nvidia just to update you guys. I have sold put options on Nvidia because I'm looking to acquire shares for cheaper than the current price of Nvidia, right? So whatever, Nvidia is at right now, 120, if it was 115, it was 110. What I'm personally going to do is I'm going to sell about 30 delta put options and look for an optimal entry or a cheaper entry than the current price of Nvidia. So I'm going to make a little bit longer of a trade here because the price target is 12 months. So there is nothing wrong with just going for a 12-month option, okay? So let's go out and pick September 19, 2025. This is very interesting because, guys, you don't have to trade weekly and monthly to make good income. You can just go for an option that expires quarterly or even yearly. So this is a little bit of a weird case, but I'm going to show you a very interesting twist here, a very interesting twist of how to actually collect income by making one trade per year and collecting a good amount. So look, because Nvidia is likely to rise from the current price up towards 150, due to what this analyst thinks, which I agree with. I would probably give Nvidia, if I had a guess, I would probably say 170, 180 in 12 months, but let's just say 150 to be more conservative. The funny thing is, by selling put options, these would all work because technically if it goes up, you can sell a 118. However, I want to give you guys a very interesting perspective to collect a bunch of cash today, like literally cash in your account today. This would be taxable. So this would be the downside, it's taxable income. But I would literally go up and sell a put option for 140, for example, just to be conservative here. And you can see how I'm essentially going to collect 3.5K of income, and I'm going to risk roughly $10,000. Now, when I say risk, this would be a max loss only if Nvidia went to zero. I'm an Nvidia bull. The chances of it going down to zero are, in my opinion, zero. They're not going to go to zero, okay? So by selling a put option, I'm saying I'm ready to buy 100 shares, and that's exactly what I'm going to be doing here. So in this example, if I go for 140, sell put, I'm going to make 3,500 on 10K, which is a 35% return in 12 months. 35%, 12 months. I'm going to double and triple the market by selling a safe put. I'm saying quotation safe because if Nvidia goes down, you're essentially owning 100 shares. This is a way to basically get assigned 100 shares. So you are putting up the capital. You can see the break even here is 104. So it's cheaper than the current stock price of Nvidia because 140 minus the 35 that you're collecting is 105. How would you like to buy Nvidia for $105 per share?
I think that they have a very strong 12-month window ahead of us. The new products that they're shipping, Blackwell, are effectively accounted for through 2025. So, the question becomes kind of growth thereafter. And that's the debate, it gets a little bit harder for the stock to work. For me, I like the stock best when there are these near-term issues that they're kind of working through, because I have a lot of faith in just how strong this business is. And so, you've seen this a couple of times now over the last year and a half. You saw lead times come down in the early part of this year. People sold the stock on that. When there was concern that Blackwell was almost too good and we'd have this kind of pause in Hopper sales, that drew down the stock. Then we had the delay. All those things sort of are great setups because, you're selling picks and shovels into a gold rush, and the strength of the gold rush is kind of the main thing here. It doesn't, the new products are really important and I want to get them out, but, it doesn't really change how good these numbers are. So for me, tactically, we've liked it better when you have these issues. You still have these questions overhanging the stock. So I'm not necessarily calling for 150 right away, but I think these are a good buying opportunity, these issues that have been dragging on the stock of late.
Guys, craziest thing he said, which is the absolute truth, is selling picks and shovels wins in a gold rush. It's not actually the person digging for gold that wins. It's the people selling the picks and shovels. Same thing with Levi Jeans. They grew their business to a huge business by selling jeans to workers because there's so many workers, okay? So same thing with Nvidia. They're not necessarily making all the plays themselves. They're providing the opportunity and the chips for all the other AI companies to make the plays, right? Their chips are in such high demand that Nvidia's revenue is going to keep rising at astonishingly fast rates. So I would say don't miss out on Nvidia. Sell put options, do covered calls, and run the wheel strategy. I have a lot of videos on this channel, so make sure that you watch some more videos on my channel about creating income from high quality companies by selling options.